Thanks so much for tuning into this conversation with the management of Pidilite Industries. They came out with the numbers yesterday, and you could argue mix said don't look at the profit number. That was exactly in line. Margins were better, revenues maybe not so. Margins were better than last quarter, the corresponding quarter last year, slightly lower than the Bloomberg estimates of 18%. I remember Mr. Bharat Puri telling me that Neeraj, don't talk to me about Q3, talk to me about H2 as a whole. And that's what we are trying to gonna do today. Talk about H2 and talk about the implications of that for FY24. Mr. Puri, great having you. Thank you so much for taking the time out. If we talk about Q4 or H2, would you reckon that maybe you were hoping for a slightly more favorable outcome in quarter 4, which didn't quite turn out the way you thought of? Would that be a good summation or not quite?
Firstly, good to be here, Neeraj. Always a pleasure to see you.
Thank you.
Likewise, when we look at quarter 4 and H2, frankly, again, it is at an overall level to our expectations. And let me tell you why. If you look at just pure quarter 4, and then we will go back to actually the full year if you want. That's probably the best way to look at it. If you look at quarter 4, we've grown volumes in the consumer businesses by about 7%. We've grown value by about 10%. We've also actually, changed our route to market of one of our major businesses, the Araldite business, to make it completely synergistic with Pidilite. So pretty much actually for close to 2 months of the year, therefore, from a primary sales perspective, we haven't sold any Araldite. And therefore, when you look at the primary numbers, it is 10 and 7. When I look at my secondary numbers, it's actually 12 to 13 to 8 and 9. And which is really exactly where we wanted it. If I take a step back and I look at the year, we've grown consumer and bazaar by over 20%. We've grown volumes by between 12 and 14%. So clearly the market has not grown at these rates for the full year. We've always guided 1 to 1.5 times to 2 times GDP. We're probably ahead of twice GDP even on volumes. And therefore at an overall level, from a top line perspective, we are satisfied. Of course, we would be happy with more. But the good thing is we're seeing in quarter 4 the first signs of recovery of rural and semi-urban. This is the first quarter in 4 quarters actually where rural and semi-urban growths have been better than urban growth. Okay. But I'd like to declare success only when it's 2-3 quarters of consistent performance. So overall, top line, satisfied. Bottom line, great green shoots, as you rightly said. The good thing is that raw material prices have moderated. At an overall level, if I look at my exit March margins, they're exactly where we want them to be for the year. And therefore, barring any black swan events, this year margins should clearly see an improvement. And as far as top line is concerned, we hope for this momentum to continue, which is why we've said that, listen, we look at the future with cautious optimism. As they say, the only headwinds are we're finding international markets, especially those export, wherever, we've got exports to the developed world, a la pigment, some of our industrial products, where our customers export, leather, textiles. There we are finding, demand conditions very soft and muted, and that's having an impact on business, which is why you'll see that the B2B businesses have actually grown much lesser than the consumer businesses. But hopefully this will correct over 6 months or so.
Okay, so let's try and piece this one by one. I'll come to the operational metrics in a bit. First, the top line. So the revenue growth. I heard you mention that you are starting to see green shoots in the rural side. Does that therefore mean that you expect, and I know there is a seasonality element to all quarters, but like for like or apples for apples, would you reckon that the momentum in rural will start showing in quarter 1? And are you therefore more optimistic about quarter 1 than what you otherwise might have been on the revenue front, on the top line front, the volume front?
Revenue front on rural and semi-urban, yes. But as I said, listen, I don't want to declare success based on 3 months. Let's see that, this whole thing continue. If you see that the first quarter also rural and semi-urban demand is robust or is returning, then definitely yes.
Is April showing some signs?
It's continuing the momentum of March, but it's not that it's gone up substantially.
Okay. The other question is, I heard you mention that B2B is not quite shaping up as well as B2C, maybe internationally and maybe locally as well. So just trying to understand both on on the mix as well as the operational metrics on industrial side, is it adverse for the time being? And is there a how do I say, a prediction that you can make about when this might turn, if at all?
See, actually, B2B locally, frankly, is not so much of an issue. So when I look at my businesses of waterproofing, the large institutional business of waterproofing, the large user businesses, I look at my business with joineries. Actually, all of that is growing well. The issue really is international businesses or local businesses which are export oriented, leather, textiles, garments, so a lot of them buy our textile emulsion and so on. These are the ones that are under strain, and frankly, I think it will take 3-6 months before these recover. But domestic B2B, frankly, is not so much of an issue. Their demand conditions are all right.
Okay. What about margins? You had spoken about how the VAM prices coming off has been a big tailwind in Q3. I reckon it would have led to this 100 basis points expansion versus the corresponding quarter last year, but maybe slightly lower than what the Bloomberg estimates were at least. So what are your thoughts on VAM prices? What's the outlook out there, and how could it impact the operational metrics?
If you just look at just the fourth quarter and you look at our advertising, increase in advertising. So if you really, rather than look at the margin, I would say look at the gross margin, and that gives you a picture of the future.
Sure.
So, we've always said as a company that we are forward looking and we keep investing in the future. The moment we saw margins returning, we have started reinvesting for the consumer. And our, ASP, therefore, this quarter is, up by a substantial amount. It's not, 5 or 10 crore. We've actually pretty much added massive amounts of it. Our whole business is, listen, we will invest in profitable volume growth. Hopefully, the margins will now sustain at the current levels, which is the current exit levels, not the Q4 levels. So they will improve from Q4. But really, our focus now has to be on making sure that the volume growth happens.
Okay. And you reckon that you will be able... So, two-part question actually. One, do you need to undertake any price increases to maintain not the exit but the average margins which are higher than the 17%, part one of my question? And part two, if you do indeed increase the prices, is that happening despite competition raking up in almost all the segments that you are present in?
See, in our belief, we actually don't need to take any pricing at all.
Okay.
We're clear that we don't need to take pricing. In fact, in some of the cases, if the prices get a little more benign or remain benign, we may actually take price cuts. And which is why I'm focusing on the volume growth, because, in an emerging market, value is always a very strong driver of growth, and we will never, therefore, neglect the value piece of it for short-term gain. So, and as far as competition is concerned, frankly, we're not strangers to competition. If you're leaders, and frankly, the good news is we are leaders in most cases, you're always going to have competition. Our job is hopefully to delight the consumer and the customer a little more than everybody else and remain leaders.
Yeah, well, which you have in all the key segments. But I was just wondering if you have to indeed take price hikes, and could that happen in wake of the fact that competition is out there and from fairly reasonable players as well? But you were saying that you won't take price hikes. If anything, you will cut prices going ahead.
Yes, absolutely.
And therefore, Mr. Puri, my derivation of that answer therefore would be that you are confident that you will not only maintain or improve margins, but you will therefore aim for better volume growth, because price cuts, if anything, will only lead to better volume growth.
Yes, our focus, as I said, has to be, we've always said, listen, our categories correlate very well to GDP growth. We must grow 1 to 2 times GDP on a regular basis, and 1 to 2 times GDP on a volume basis, not on a value basis. And frankly, that's our objective. That's what we keep chasing.
Okay. My last couple of questions, Mr. Puri. One is, if the GDP growth comes in a bit delayed, but people invest for the upcoming opportunity in India slightly earlier, because I hear almost all real estate companies, whether commercial or residential, as well as automation companies, talking about a very large order book that they are seeing in their businesses. So my question is, even if the GDP growth is a bit delayed, would you reckon that you might preempt the upcoming GDP growth by penciling in a fairly strong FY24, even if growth comes in only, let's say, in a major way in FY25?
See, very difficult to say. Remember, in our businesses, even, our focus is home improvement. 2/3 of our business comes out of renovation and only 1/3 out of new construction, right? So new construction is always a multiplier. In a normal year, we would like to grow at GDP growth by volume. The multiplier is if there is good construction conditions, there are things, new categories that we are addressing, we're increasing our total addressable market. That, is what we hopes for us to step up from one times GDP to 2 times GDP. So overall, as we look at FY24, clearly there is renewed action and interest in the whole real estate and construction sector. We are seeing that. We are seeing that in our business. If rural and semi-urban is also back for a prolonged period of time, I think all this augurs very well for the whole home improvement stroke, what I would say the broad construction sector.
Okay. My final question, Mr. Puri, and I'm changing it a bit because I'm not asking about new construction, but and I'm asking this to every large management, as the head honcho of such a large organization, as you stand at the start of FY24, maybe for FY24, maybe for the next 3 years, the 1 or 2 key things that you're looking forward to / hoping to achieve / looking forward to display to investors or customers?
We are a growth story, and the wonderful thing is we're in my view, in the advantaged sector, because 70% of all that has to be built on the housing sector in India by 2030 has still to start being built, right? So if you look at it, we are strong believers in the India story. We believe India's time has come, and therefore we have to be positioned well. Just to give you a perspective, Neeraj, in this quarter alone, we will open 6 new factories. In the last 12 months, we've got now 12 new facilities up and running. By the end of the next financial year, we will have 4 more. So we're ready for the next phase of growth. India's time has come. We're right now positioned, and we believe our sector is going to be one of the lead sectors. So really, our objective remains consistent with our vision. Together, we will create a high-performing, innovative Indian multinational where it's a pleasure to work.
You are not doing all of this, Mr. Puri, with a short-term time frame in mind. Certainly seems to me from this last answer that you're actually penciling in or batting for higher growth post FY24 when so many of your facilities come on stream versus what you might do in FY24. Maybe I'm preempting too much, but just trying to understand.
Absolutely, yes. See, Pidilite is a long-term player. You look at our performance over a 10-year period, over a 20-year period. We are clear that, listen, the India construction stroke renovation story is still to play out. We have to be well positioned, and you will see slowly and steadily we consistently keep increasing what all of you call the total addressable market. In our case, I have a simple one-line objective. If anybody wants to build or improve a home, they should have one company that they need to go to, and that company is Pidilite.
Okay. Well, we wish you all the best for that, Mr. Puri. Thank you so much for taking the time out and speaking to us today, and all the best for the year ahead.
Thank you so much, Neeraj. Always a pleasure.
Thank you so much, sir.
Thank you, my dear.
Mr. Puri, just one quick thing. Mr. Puri, there. So you are the second person that I'm hearing giving me this statistic of this 70% of all the buildings in India in 2030 are yet to be built. I was speaking to ABB last week. They gave me the same statistic. Is this, where does this come from, Mr. Puri?
This comes from the government's this thing of what they, by 2030, the amount of housing they need and where they are today. This is government figures.
Okay, perfect. Great. Okay. Thank you so much for giving me that thought. And I'll connect, my team will connect with your PR, Hiral, if I'm not wrong.